Hello, everyone, and welcome back. Also, let's talk about what will happen with Tesla in the next 3 to 5 years. There is a lot of worry about the Model 2 right now. It is an important part of Tesla's growth plan. It is expected to bring in 50 to 60% of the extra growth that is expected in the next 2 to 3 years. Robotaxi and full mobility, on the other hand, might not come to life for another 5 to 6 years. In the past 10 years, we've had a lot of tense times with Elon Musk and Tesla. This is one of them. Recently, what used to feel like a Cinderella story has been more like a bad dream. Next Tuesday is a very important day, and Tesla needs to be in charge of the story. If there isn't clear guidance, things could get even worse. We look at two amazing predictions that could have a big effect on Tesla's path and the auto business as a whole. The future looks like it will be exciting. To begin, we'll look at a bold prediction from a top Wall Street analyst who is not only positive about Tesla, but also outright high on it. This analyst thinks that Tesla's market cap could not only get back to where it was, but also reach new highs very soon. After that, we'll look at the excitement surrounding Tesla's long-awaited robotaxi event, which some are calling could be the most important day in the company's history. This event could help Tesla do much better than its current business and technology successes. We'll look at what these predictions mean, investigate the reasons for this optimism, and consider how these events may affect the market and your investment plan. Whether you're a die-hard Tesla fan, an interested investor, or someone who is amazed by how quickly automotive technology is changing, this show is for you. Fasten your seatbelt, click like, and if you haven't already, sign up for Tesla Stock News. Let's take a look at these amazing changes in Tesla and other fields. Morgan Stanley just put out a study telling investors that they should include more AI-related industries in their valuation model for Tesla. These include AI computing, energy storage, and maybe even humanoid robots. It's really amazing how much attention is being paid to AI now. A well-known person on Wall Street named Dan Ives also said that the story about Tesla is starting to change. One wonders if analysts will continue to focus on Tesla's auto margins or if they will start to see how Tesla's AI innovations affect more than just the car industry. Dan Ives, managing director at Wedbush Securities, is now here to join us. Dan, Tesla's new ideas, like the robo-taxi, are making more people think that the company could reach a trillion-dollar market cap. You said that Tesla is an AI play that is undervalued in the market. Could you say more about that? While Tesla's market value has gone over $1 trillion before, ARK Invest thinks it could reach around $8 trillion in 5 years, mostly because of AI and self-driving cars. Elon Musk has said that if the Optimus robotic robots development goes well, Tesla's market value could reach $25 to $30 trillion. Dan also talked about how important the AI part could be for Tesla's value on its own. As we look forward to the August 8th reveal of the robotaxi, there are questions about how long it will take to make them and when they might actually be on the roads. People are very excited because Tesla plans to start making the cars soon after the reveal. However, the stock market hasn't responded much so far. Viewers, what do you think the market will do after this is shown? Will there be a big change in Tesla's stock? In the past, like with the Model 3 and Model Y, Tesla has been able to go above and beyond what buyers thought would happen. With the robotaxi event coming up, which suggests that autonomy may be just around the corner, it makes you wonder why the market hasn't responded more strongly to Tesla's bold move towards self-driving cars. Most investors seem satisfied to watch these innovations from afar until they start to make money, and then they jump in. This could be seen as a cautious approach. What do you think the market will do in response to this method, especially when the financial effects of Tesla's innovations start to show? It would make sense that investors would be more proactive in their plans if they really saw the promise here. Many people, including Dan Ives, say that the upcoming robotaxi event could be the most important day in Tesla's history. It could lead to huge changes in both robotaxis and self-driving cars. At its core, Tesla is an AI and self-driving tech business that is shaking up the tech world. Dan says it's possible that Tesla's stock will double in the next 12 to 18 months. This statement, especially coming from a seasoned analyst like Dan, shows that you have a lot of faith in Tesla's future. Even with all this hope, Tesla's stock is still below its all-time highs from 2020, which makes you think. In terms of Tesla's internal dynamics, the number of employees has dropped by 14% since Elon Musk announced layoffs in April. The world headcount is now 121,000, down from over 140,000. What might these cuts mean for Tesla's ability to grow and keep costs low? Even though it's hard, the layoffs seem to be a smart way to cut costs as demand around the world falls, especially in key areas like China. As we move on to the next quarter, hopes may be low, but these changes could set the stage for big benefits in the future. Tesla is going through what you might call a Category 5 storm, but there's a strong sense that a Cinderella story is about to begin that could bring the brand new life, especially through its AI efforts. Now let's talk more about the problems that might come up with the release of Tesla's robotaxi. There is a lot of information about how Tesla has created a lot of buzz around the release of new products. This approach has worked well and poorly for the company. One famous example is the launching of the Cybertruck, which got a lot of media attention and public interest because of its unusual design and an accident that happened while it was showing how durable its windows were. This trend of high anticipation could make things more difficult when the robotaxi comes out. On the one hand, the hype helps get people interested in investing in new technologies and getting people excited about using new technologies. On the other hand, it makes it more important for Tesla to keep its vows. If the robotaxi doesn't live up to the high hopes that the company has raised through strong marketing, customers may be disappointed and lose faith in the company. Not only is it hard to meet standards, but it's also hard to make sure they are in line with what current technology can really do. Autonomous driving technology is improving quickly, but there are still a lot of technical and legal problems that could make it hard for robotaxis to get up and running. Tesla needs to be very careful about things like safety standards, getting approval from the government, and people's willingness to accept driverless cars. Another thing to think about is the operational and organizational problems that come with putting together a fleet of self-driving cars. This includes everything from the charging stations and maintenance facilities that these vehicles need to run safely to the software updates and cybersecurity measures that are needed to keep them running smoothly. So the excitement about Tesla's new products is good for getting people's attention, but it needs to be carefully managed so it doesn't get in the way of the technology's real progress and readiness. Tesla has had to find a delicate balance between building excitement and keeping people's hopes realistic many times. But with the launch of the robotaxi, that balance will be looked at more closely than ever. Finally, while we're looking closely at Tesla's new ideas, it's important to keep the bigger picture of the electric car market in mind. Ferrari is making big steps forward by releasing its own high-end electric sports car next year. It will cost an unbelievable $500,000, but it will be worth every penny. This move shows that Ferrari is serious about making the switch to electric cars as the future of great cars. This event not only shows how competitive the luxury EV market is getting, but it also shows how the whole industry is moving toward more environmentally friendly ways to get around. As well-known luxury car companies like Ferrari get used to the new electric world, it will be interesting to see how their entry changes market trends and customer tastes. Robert Frank of CNBC recently talked to Benedetto Vigna, CEO of Ferrari, about the future of electric cars and Ferrari's plans for the future in this changing market. Vigna was optimistic about the move toward electric cars and said that he thinks many present Ferrari owners will switch to electric cars as more people try out the company's electric models. His comments support a larger trend in which even well-known high-performance names like Ferrari are adapting to the electric revolution. From what Vigna says, it's clear that Ferrari isn't just playing around with electric technology, it's betting on its future. This change by a brand that is known for being the best in terms of luxury and speed in cars is a big sign of how the industry is going to change. Manufacturers of high-performance cars have traditionally relied on internal combustion engines. However, electric cars' better performance metrics, like Tesla's Model S Plaid's acceleration times, are changing the competitive scene. In fact, the speed with which these electric cars can go from 0 to 60 miles per hour has made standard car companies like Ferrari and Porsche scramble to catch up. People don't just see this switch to electric as a choice. They see it as a must if they want to stay in business and be relevant in a market that is becoming more and more dominated by electric-first companies like Tesla and Lucid. It's interesting to see how traditional luxury and high-performance brands can use their pricing and brand tactics to their advantage. Because these cars cost hundreds of thousands or even $500,000, the companies that make them can afford to use cutting-edge technology and expensive parts so they can stay profitable even when they don't sell as many cars. There's a bigger story shift going on that goes beyond the tech problems and changes in the market. Wall Street was mostly interested in Tesla's car margins just a few months ago. Now, there's more and more talk about AI's role and how it can be used in the auto business. As we wrap up today's talk about Tesla and how the auto industry is changing, it's clear